We're going to get a quick check of the markets now. Tom Piotrowski over at CommSec. He's got his eyes across the data as he usually does. There he is. What are you reading, Tom?
Just my memoirs, Pete.
Garfield comics?
Yeah. That's quite old school, yeah, but if you like.
I loved those.
Maybe a bit of Staria.
Yeah. Now you're talking. How are we looking today?
Look, the market's going to kick off well in negative territory. We'll be down by 1.25%. So there was a lot that went on last night where central banks were concerned. And we also had the legacy of the Fed's decision yesterday where, of course, they left rates on hold, Pete. But what was quite notable is that they lowered their expectations for unemployment in terms of the unemployment rate, and they raised their growth forecast. So the delayed reaction was that we saw long-term interest rates, specifically in the US, push substantially higher last night. And that created some pretty stern headwinds as far as equity markets are concerned. So technology names, as you might imagine under these circumstances, suffered. The Nasdaq was down 1.8%, the S&P 500 down 1.6%, the Dow Jones was down by a little over 1%, and a big push higher for long-term interest rates. We don't talk about 30-year treasuries in the US very much, but these are 30-year government bonds, and they are quite sensitive to inflationary expectations and that sort of thing. And we saw those bonds up by about 11 basis points. That's a decent push higher under these circumstances. We haven't seen these sorts of interest rates where long-term interest rates are concerned in about a quarter of a century in some cases. So that is problematic for stocks, as we've seen. Elsewhere, a surprise decision from the Bank of England last night. A couple of days ago, it was expected that they'd be hiking rates. They left rates on hold last night, but it was still a hawkish pause. Nonetheless, we saw European markets generally weaker. The UK market down 0.2%, French market down 1.6%, German market down 1.3%. But European interest rates followed US rates higher. So that was part of the reason why European stocks were under pressure yesterday.